We have been seeing car dealer stocks accelerate in the past month, but do these stocks have more room to run? Our next guest says yes. He's got 5 buy ratings in the space, and he joins us now to make his case. Michael Ward is an auto analyst at the Benchmark Company. Michael, welcome. Good to have you with us. Let me just ask one stray question before we get to the real meat of this segment. Does the fact that the dealers are making more profit mean that the manufacturers make more profit too?
To the extent that they're not discounting as much. You know, if you look at just incentive spending, there's been a lot written about ATPs going up $10,000 since the end of 2019. About a third of that is from lower incentive spending. So the incentives comes out of the vehicle manufacturer's pocket. Then in turn, they don't cut the pricing on the suppliers as much. So it's better for the overall industry.
All right, let's talk about the dealership stocks. And as Phil pointed out, there's a kind of schism between the publicly traded, more traditional dealers and the online dealers. Explain why that is true and which you favor.
Okay. One thing on Earl Hesterberg, before I get into that, one of the primary or more important responsibilities of a CEO is to make sure you have a good succession. To that extent, Group 1 has a great management team, and Earl put that in place. So I think he should be commended for that. As it relates to the new car dealers versus the used-only retailers, it's a great time to be an auto dealer. And I think part of that will continue longer term because the dealer model has changed. If you think back to the 70s, when General Motors and Ford and Chrysler were just getting crushed in market share throughout the 80s and even 90s, the model has continued to trend. It's changed over those 30, 40 years. Now you're in more of a relationship type model. The vehicle manufacturers are going to be carrying less inventory than they have historically, hopefully a lot more than they're carrying today. And as a result, it'll become more of a prestige model, which means more profitability for the good dealers. Yeah,
why would you ever go back? Why? I'm sitting there as I drive to work and I pass a Chevrolet dealer, happens to be on my right side. I've done business with them in the past, and their lot seems maybe a third full. Why would you ever go back to a model where those dealer lots are full of excess inventory, and so then you're forced to discount, you're forced to throw incentives to move the metal?
Yeah, and a lot of that was initiated by GM and Ford. Remember, GM and Ford, they had this declining model. They were losing so much market share. They had very high structural cost, very high fixed costs. A lot of that has changed. GM and Ford's break-even levels are down 50%, over the last decade. They want a lower model, a more efficient model. Mike Jackson from AutoNation argued for decades about carrying less inventory.
Right.
The vehicle manufacturers had to operate at a higher level of utilization to keep that cost in line. Now what you've seen is it started with COVID. You recovered faster than we expected,
right,
and the inventory was absorbed very quickly. So now you're at 1/3 of historical levels with inventory, and the industry has become more profitable. You asked me earlier about some of my top picks.
Yeah, give me your favorite. Give me your favorite.
Yeah. Penske Automotive Group or Group 1. Both companies have exposure in the UK market, and the dynamics that are leading to the positive results in the US are even more positive in the UK market, so that should be a positive.
Michael, we covered a lot of territory there in a short period of time. Michael Ward, thanks.